Stocks see a broad sell-off with declines far outstripping advances. Realty, auto, financials are the big losers, even as metals and consumer durables eke out some gains.
PB Fintech's top brass tells CNBC-TV18 they will make a one-time only investment of up to $100 million for a 20 to 30% stake in a health venture to set new cost benchmarks, as most can't afford hospital room rates at 78,000 rupees per night.
Giving relief on GST to Infosys on the hefty rupees 32,000 crore demand is a policy call for the government to take. DGCI's principal Anil Gupta tells CNBC-TV18 in an exclusive chat. He adds that further action by the DGGI in this matter is only expected after Infosys responds to the pre-show cause notice.
Chinese stocks soar after an inline manufacturing PMI print on stimulus-driven recovery hopes, with lenders asked to cut mortgage rates by end of October. But Japanese stocks dip after monetary policy hawk wins the race to become the next prime minister. A very good afternoon. You're watching Halftime Report on CNBC-TV18. I'm Ekta Batra, and with me is Mangalam Malu. Well, it is turning out to be a session where we are seeing a soft start to the week. So currently we have the Nifty, which is down around 1%. We have the Bank Nifty, which is marginally underperforming, so down around 1.4%. And the mid-caps, which are marginally outperforming on a relative sense, so down around 0.4%. Maybe it is the mixed picture in Asia, which is probably weighing down on us. We have China, which rallied after that better-than-expected PMI, but the Japanese markets, which are under pressure. Otherwise, I just want to point out the advance decline ratio is weak, so let's see whether there's any kind of marginal improvement as we close towards the day. But as of now, it's favoring the declines. Hi, Mangalam.
Hi, Ekta. It is indeed favoring the declines. But, even as we're declining in the frontline indices, the Nifty Bank is the key culprit in today's trading session. Over the last two trading sessions, the Nifty Banks actually corrected over 1,000 odd points as well. What's interesting is today, we don't have to struggle to find pockets of green. Metals, for instance, for the 8th day running, the index is in the green. A bunch of stocks are doing well. Even in the broader markets itself, you have, some of these consumer durables doing extremely well. Whirlpool, for instance, is up around 4%. We're seeing some traction in names like Alembic Pharma, Dalmia Bharat, IDFC as well. And down the barrel, if you look at it, a lot of these cash stocks also putting on decent gains. Reliance Infra has been on an upward trajectory for the last many trading sessions, and now the stock has rallied about 65% in the month of September itself. SJS Enterprises, another company seeing some traction, up around 8% with decent volumes, and giving it company on the way up is Saregama, which is up around 10% as well. All these stocks gaining with decent volume. So we'll keep an eye out on a bunch of these stocks which are buzzing around. So it's down for the frontline indices, not particularly out for the broader markets itself. The mid-cap index down by about 1/3%. But many stocks in focus today. PB Fintech will be one of them. A minority investor in a company which via which healthcare foray will happen, and the investment would be no more than $100 million. That's the word coming in from the group chairman and CEO Yashish Dahiya. They're looking to bridge the trust gap between hospitals and insurance companies. So that's the word coming in. Remember, the stock was in focus all of last week after our colleague Yash wrote the story about them looking to enter the healthcare space, and thereafter there was a bit of a decline. But now some more details emanating from the management commentary to CNBC-TV18. So let's hear him out.
PB Fintech is looking to make an investment subject to board approval in a separate venture, which actually is not a PB Fintech subsidiary. PB Fintech would probably be a minority investor between 20 to 35% equity holding, right? And this venture, for lack of a better word, let's just call it XYZ. XYZ has its own life beyond that, and PB Fintech's liability is limited to that first investment. It does not have any compulsion to keep investing into the future, right? And all this is subject to board approval. The model is essentially an HMO model. And this entity is obviously finalizing with its other investors and other partners. They could be healthcare companies, they could be insurance companies, they could be development finance institutions, they could be private equity players. There's a whole bunch of people that it will speak to. This hospital is going to be aligned to the insurance industry. We are not really thinking about what it does to the other hospitals. I do believe it will, if successful, set benchmarks for the others.
All right, that's about PB Fintech, the stock on our radar. But let's get to the most important discussion that we've lined up for you in the show today. It's latest monthly drug alert list. The Central Drugs Standards Control Organization has declared 53 drugs as of not standard quality. Ekta, how has the pharmaceutical industry responded, and what exactly is the extent of this issue?
Well, yes, I'll take you through the details. Well, after the Central Drug Standard Control Organization, or the CDSCO, flagged 53 commonly used medicines for failing quality tests, several pharma companies have defended the quality of their products. In its August 2024 report, the CDSCO declared over 50 drugs as not of standard quality, or NSQ, including essential medicines by major companies like Alkem's Clavim 625 and Pandi, Sun Pharma's Pantocid and Palmosil, and Glenmark's blood pressure drug Telma H. Now, Sun Pharma, Glenmark and Alkem have responded, stating that the flagged batches were spurious and not manufactured by them. Torrent Pharma issued a similar statement regarding Shelcal 500. The Indian Pharma Alliance, which is IPA, represents around 23 pharma companies, including the likes of Sun Pharma, Lupin and Cipla, stressed that NSQ and spurious drugs should not be mixed up, as it wrongfully implicates legitimate manufacturers. NSQ drugs may have labeling issues or incorrect ingredients, while spurious drugs are fake copies. The IPA warned that linking spurious drugs to legitimate companies could damage reputation and harm India's standing as a reliable drug exporter. Meanwhile, experts like activist Dinesh Thakur suggest that the CDSCO publish investigation details to determine if flagged drugs are counterfeit or genuine, and is easy to access this kind of data, as pharmacies are required by law to have records of all drugs. Now, the outcome of the investigation would be crucial, according to experts. As experts point out, spurious drugs on our hands would be a far greater problem to solve. According to a 2022 study by ASSOCHAM, around 25 out of 100 drugs are fake, counterfeit or substandard in the country. In fact, the latest case making headlines has been antibiotics supplied to the government hospitals in Maharashtra were actually just talcum powder mixed with starch. Meanwhile, the government and companies have been taking important steps to curb the spurious drugs menace. For example, all large companies have incorporated unique features and QR codes in its packaging to ensure genuine products are differentiated from fakes. The government has also been active. For example, they revoked licenses of 18 pharma companies in December 2023, increased quality checks and increased inspections as well. However, experts point out the need of the hour might be greater vigilance and possible tightening of regulations and implications around it as well. Okay, well, on that note, we'll take a short break, but up next, we'll continue to focus on the space and connect with Rajeshwari Hariharan, who's a counsel at the Delhi High Court, and Mr. Reddy, the MD and CEO of MedPlus Health Services, for their perspective. Welcome back. You're still tuned into Halftime Report. Well, let's continue our discussion with regards to spurious drugs, the difference between that as well as not of standard quality, and the latest August 2024 report by the CDSCO. We have with us Mr. Reddy, the MD and CEO at MedPlus Health Services, and we have Rajeshwari Hariharan, who is a counsel at the Delhi High Court, who will be joining us shortly. Well, Mr. Reddy, let's start with you. You have around 4,400 pharmacies that you run across India. Give us a sense in terms of whether you all have tackled this spurious drugs problem at your pharmacies, and how does one recognize it?
Let me just take a quick minute to tell you how I started the company. I'd actually written a business plan in Wharton in 2005 when I came across an article which said that 30% of all fake drugs in the world are made in India. So the plan, I set up the company in 2006 primarily to give a USP or to make sure that everyone got genuine medicines, had access to genuine medicines. So we have been looking at this problem from the time we started, and the way we tackle it is we work directly with the companies in procuring the products. a lot of times small retailers who can't have access to the distributor or the CNF agent end up buying through wholesalers and small third-party sellers from where they end up actually getting these fake drugs. So for us, given that we buy directly, we have not seen that problem at all.
Okay, so you haven't seen the problem arise at all till now. But we do have Rajeshwari, who's, from the Delhi High Court, joining in to discuss this as well. Rajeshwari, thanks very much for taking the time out from a busy day. But if you could just give us a sense in terms of how serious this issue is, which the CDS CEO has flagged off about these 53 drugs, many of them from very legitimate companies such as Sun Pharma and the rest.
So there are two issues here. The kind of drugs that the CDSO has now banned is a different category altogether. These are drugs which are combinations. So what has now been banned is a combination of an existing drug. So this is not necessarily a spurious drug. Now, when you talk about spurious drug, that's a completely different category. Spurious drugs are those where the drug is either adulterated or the active ingredient is completely different, or it is somehow mixed. It's not the actual thing which is promised to be. So for example, if they're supposed to be selling antibiotics, then the drug in the container will not actually contain antibiotics. It might just contain something else, or it might be adulterated with something, or it might just have completely different ingredients, or it might have been expired. That is the category of spurious drugs. The ones that the CDSO has now banned are drugs which are of good quality, but they are in the market for some time, but people have made combinations. So they've made a combination of maybe an antibiotic with some other cough drug or something like that. So it's just a combination which the CDSO has banned. There is a lot of history to this, because in the past also the CDSO had banned certain drugs. Then the Supreme Court had come down very heavily on them and said that, all right, you want to ban the drugs, then you need to have a rationale as to why you will ban it. You have to study the drugs. You have to establish a committee. The committee will go through it. If the committee finds that this is an irrational combination, or finds that the combination is maybe not good.
I just want you to help us differentiate between what is a not for standard quality drug, because that could be even just labeling issues, and what is the penalty for, say, manufacturing a spurious drug?
This penalty for manufacturing a spurious drug is quite drastic under the Act. In fact, if you are caught having spurious drugs, then the Act provides for criminal action. In fact, your director can be behind the bars. So it's that very serious. Your factory can be seized, it can be locked. So there are very serious consequences of selling spurious drugs. So spurious drug is one which is not of a standard quality. It differs from the standard, either because it's expired or it has adulteration, something like that. That is spurious.
All right, we take that point. Let's go back to Mr. Reddy. Mr. Reddy, of the sales that you do, what are the overlaps between, say, something like not of standard quality, and how do you tackle that menace? I mean, one understands that spurious drugs can be taken care of by buying directly from the company or authorized dealers from the company, which someone like you with over 4,000 stores are able to do that. But of drugs which are of not standard quality, or say, as Ms. Hariharan was saying, that some of these combinations which may not be, approved, how do you tackle that? And what proportion, according to you, would be that in the overall market?
So again, the differentiation is between fake, which is outright fake. Some XYZ company makes a drug and basically sells it off as a Sun Pharma or a Dr. Reddy's or whatever brand out there. Very easy to do that because, today packaging industry has come a long way. It's very difficult to make out what the drug is inside that. And the fact that there are 10,000 odd manufacturing companies, I'm pretty sure a lot of them really don't have significant business. A lot of these guys will fall prey to this, will go and basically make it for someone, and it's very easy to actually get that done. So that is a different, quality class of drug altogether. That's the fake drug, right? We don't let that ever come into our system because we're buying directly from the company. One. On the not for standard quality, that's a different story altogether. It's almost impossible to tell And I'm assuming that any of the top brands out there will always be of standard quality. I don't think there's any, problem at all. The top brands, they make these in the best qualities, best kind of settings possible. They have standard operating procedures out there. We ourselves have seen that a lot. We ourselves get our own drugs made in the same factories in which these guys get them made. I don't think there's any problem out there. But once in a while, there could be something out there, and those are easily recalled. And not of standard quality could mean, let us say the dissolution profile is not exactly right, or maybe the assay is not showing the exact amount of quantity of drug which is required. 95 to 105% is the amount of API required in a drug. So it could be slightly lesser. And so someone could, on a random check, pull it. But I haven't seen any instance in which a top brand has been basically pulled up for NSQ. Now, it is possible that someone has found the drug and said this, this top brand is actually not of the right quality, but that in my mind is probably because that company never even made the drug. Someone else made it and passed it off as this company's drug.
So just on that point, Mr. Reddy, I just wanted to understand that you all have a private label that you all sell drugs through as well. So now how do you ensure that there's no kind of contamination, no kind of spurious drugs coming through? Do you have a QR code which you implement on all of your drugs? Or is it, going against the ethos that you want to keep your costs low? So how exactly do you ensure this?
See, for us, when it is our own drug, it is the most tightly integrated supply chain, right? We are going directly to the company. We're making sure they're making it the right way. We are testing it. After they test it, we also test it. Then it goes into our system and it is sold only in our stores. So the MedPlus drug is not sold anywhere else at all. So if you are buying a MedPlus drug from the MedPlus store, there is absolutely no chance of it being a fake. And as far as quality is concerned, we are getting them made in the same factories in which all the top companies are getting them made. In fact, we actually 90% of our stuff is just made in around 4 factories, and these are 4 of the best contract drug manufacturing companies in the country, on par with anything else in the world. So we get all of these made, so we're very, very sure about the quality, and we're not selling elsewhere. No one else is selling MedPlus drugs, so you can be sure if you're buying a MedPlus drug, it is guaranteed to be genuine.
Okay. Just before we wrap this up, Rajeshwari, that ASSOCHAM report indicates 25 out of 100 drugs in India are spurious. Can you give us a sense, how do we curb this menace? Do you need to sort of strengthen your penalties when it comes to spurious drugs? Where does one need to sort of strengthen the supply chain?
So we have to, I think, tackle it on both fronts. One, of course, we need to have more stringent law, and as soon as we find a counterfeit or a fake drug, obviously we need to take extremely stringent action. Second, with regard to the drug per se, so that the consumer is able to be, able to find out whether it is a fake or not, probably you need to have some more stringent, maybe on the packaging, you need to have some kind of, not holograms, but some kind of an OTP system, some kind of systems, maybe, some kind of technology integrated systems. So the consumer will be able to know that, okay, the drug which I am purchasing, the liquid which I now have, the package or the product that I now have purchased is actually a genuine one. And you should be able to authenticate it in some way, either by way of, hologram which cannot be taken out, or some other technological intervention should be there so that we are able to, the consumer is able to find. Ultimately, it is the consumer, who is affected by this, and consumer is the one who is going to suffer. So that's the reason why at both ends we need to tackle it, and perhaps this should also become part and parcel of the law. And I believe the drug controllers and the pharma companies are working towards that, because pharma companies want the consumer to get genuine drugs. I don't think there's a single pharma company, good pharma company, who wants really, bad drugs to come to people.
Take that point. Thanks a lot, Ms. Hariharan and Mr. Reddy, for joining in and throwing light to this important topic. The key takeaway from here on is buy from, trustworthy chemists and buy from trustworthy companies as well, and perhaps look for marks on the packaging which may perhaps tell you about the genuinity or not so genuine products that are coming in the market?
Yes, I think that would probably be the key issue, because the key issue here is that spurious drugs are making their way into bigger brands as well. So how do you ensure that even if you go to a chemist which is reputed, and you need to basically probably solve the problem on the larger level of curbing spurious drugs?
All right, take a short break, come back, talk about the F&O space in the market, especially given the sort of sell-off, extended sell-off that we're seeing on the Nifty right now, currently testing that 25,900 mark. Welcome back. You're watching us here on Halftime Report. Perfect time to get you the F&O update at midday itself, with the Nifty breaching that 25,900 mark, being at the low point of today's trading session. Let's look at all the key indices. Market at day's low with the Nifty Bank as well. The mid-cap index, however, is marginal outperformer, but the advanced decline ratio would have you believe otherwise, with more stocks declining than the number of stocks which are advancing. Having said that, we do have a bunch of sectors which are doing extremely well. There are islands of green. So case in point, something like the metals space, you have 1.5% for Tata Steel, almost 3% for JSW Steel, a bunch of other stocks in the metal space doing extremely well this afternoon as well. But we do have, some of these other cash stocks which are buzzing around as well. So not all is lost for the market right now. Say Saregama is up 9%. We have Reliance Infra, which is up nearly 65% this month, and a bunch of other stocks which are seeing decent gains with a fair amount of volumes too. But for the frontline index itself, the fact that we've broken below that 26,000 mark has gotten a lot of these bears excited at the 26,000 level itself, where the call has seen a lot of writing. 26,100 looks like the next leg of congestion on the way up, though 25,900 put writers are equally active as well for about 100 rupees. The Nifty is at 25,900, so maybe 25,800, 25,750 could be the next leg of support. The fact that we've also rallied so much is visible in the 20-day exponential moving average for both the Nifty as well as the Nifty Bank. So we'll keep an eye out on these levels for the frontline indices, were they to break below today's support levels as well. The one stock I'm watching out for today is Hindustan Copper, may enter F&O ban on day 2 of October series itself. So keep an eye out on that. On that note, we'll take a short break, come back, get you more on the markets and a lot of stock-specific action on the other side.
Welcome back. Well, AstraZeneca has completed 45 years in India. Over the last 45 years, the company has brought in 50 new innovative medicines to India, and they aim to continue to bring in those kind of medicines, as well as expand the indications of their existing drugs. I caught up with Dr. Sanjeev Panchal, who's the country president and MD of AstraZeneca India, to talk about their 45-year journey and the way forward. Listen in to this particular exclusive conversation.
We are really celebrating 45 years in India, and very, very proud to say that our mission of bringing innovative medicines to India and delivering life-changing medicines to our country and, of course, to the globe has been the key purpose of our organization. We've been continuously pushing the boundaries of science, and we have achieved significant feat over the last 45 years. It started in 1979 when we started operations in India. And over the time of 45 years, we have brought in 50 new medicines to India, innovative medicines to India. But also over time, we have changed from not only a manufacturing entity, but also from a commercial organization and also from a clinical trial perspective in last 45 years. So we have now two entities. Earlier, we were a listed company only, which is AstraZeneca Pharma India Limited. We now also have AstraZeneca India Private Limited, which is bringing the Global Innovation Center into our country, and including technology, data, AI, but also rare disease, R&D, also GBS, Global Business Services Capability Center, into the organization. So very proud of two things. One is we all are driven by the purpose of bringing innovative medicines and life-changing medicines to our country. Over the 45 years, we have strengthened our footprint not only from commercial, but also to a global capability center, a technology center, and bringing RD, clinical trial, and also a GBS capability into India. So that has been a great footprint. As we look forward, we are looking to even bring innovative medicines faster to India so that Indian patients can benefit from it. And number two, we are quite passionate about sustainability, really taking care of people, the society, and the planet of our country. So that has been our journey, and very excited that what we can go ahead and do for our people in India and the society and the planet of our country.
Well, you also received permission recently from the CDSCO for sale and distribution of Imfinzi, which is basically an additional cancer indication for this particular drug, which is also already being sold for lung cancer at this point in time. Can you just tell us, the sales we understand is already around 200 crores for this particular drug. What would this bring to the table for AstraZeneca in terms of incremental sales?
Again, let me answer this question by the purpose. So, overall, our overall purpose for cancer is we're really leading the revolution of transforming cancer cares across the world. And what is happening is the science is changing so fast. You would see that today's cancer is not limited to stage 4 cancer. So we are looking at bringing early screening and diagnosis, and also bringing treatment as early part of lung cancer. So this additional indication is an effort towards a broader mission and vision to eliminate lung cancer as a cause of death. Now, this additional indication is for non-small cell lung cancer, who with this study which we got approval for was an AGN study. This gives an additional improvement and transform patient outcome for the patient. So it's already sitting in a form of a cancer, but this additional indication further broadens our therapy and outcomes for patient in a different form of cancer, which is non-small cell lung cancer for the patients.
AstraZeneca has done well. In the previous fiscal, you did revenue growth of around 29%. In the quarter gone by, your revenue growth was around 31%, but your margins were lower at around 10-odd%. So give us a larger scale guidance that we can work with. Will this double-digit growth continue? Will it be above 25% growth in terms of revenue? And where will margins and profitability stand?
Again, I'll give you a broader perspective. As I said, that our mission to bring innovative medicine faster to India is the important thing. And you could see that how we have launched new indications, new assets. We have entered into a new therapy area, which is rare disease. Overall put together is helping us as an outcome of the growth for our company. We won't be able to give exact numbers what it would be, but what we can clearly say that we said last year about 15 new medicines and indication we want to bring. We have already got approval of 9 out of them, out of 15, which we want to bring up till 2025. So I think as we progress and bring new medicines, you would see a continued strong growth for AstraZeneca. I won't be able to give you exact number, but you can continue to see a strong growth for AstraZeneca as we bring the new indication and new assets to the company.
You're planning to exit your manufacturing site in Bengaluru. What is the status behind that? And would that be the only non-core asset that you would look to probably exit?
As we're very clear that we want to be a specialist organization, a specialist disease area organization. So we are present in cancer, which is oncology, rare disease. We are in respiratory, we are in biopharmaceutical. Our overall strategy is to become a more specialist-led organization and improve access for our medications, both in bringing drugs and early assets. So the factory is also a global manufacturing strategic review, which has happened. We have said that we were looking for a CMO, and that process is over. Now we are going to the next step as we go ahead. But our main objective is to ensure that we continue uninterrupted supply for our patients. But it's a larger two parts. One is the global strategic review, but at the same time, we also want India to be a more specialist disease area-led organization with our innovative medicines.
Just a quick last question, Mr. Panchal. You know, you all recently partnered with Mankind Pharma for asthma treatments in India. Can you share more about this partnership? How much is it probably generating in terms of sales, and what can we expect in future partnerships with Indian companies, which probably have a better distribution base than you all, and that's probably the reason for the tie-up?
So as we said again, that AstraZeneca India focus is to ensure we bring innovative medicine faster as possible. At the same time, we also want to improve access to our current medications, where we can improve by partnering. And Mankind was a very good example. We have budesonide formoterol as a molecule which is there, and the device was absolutely great, a simple device, and it can reach. We wanted to reach to more number of patients. So this is one example which we want to do. We focus to ensure that we bring innovative medicines. At the same time, we also want to ensure that we improve access for our medication. So it's an important strategy for us to do both things at the same time, bring innovative medicines where we are strong, at the same time we improve access for our medication. And Mankind was an exclusive distribution deal which allows our partners to improve the access for our innovative medicines.
Welcome back, and joining us on the show now is Paul Bartholomew. He's Senior Analyst at Metals at S&P Global Platts. Paul, hi, thank you so much for joining us. And what a month of September we've seen when it comes to metal prices, ferrous and non-ferrous both, and especially with China throwing up so many stimulus measures. The sentiment clearly has been taken in. Much of the price is already factored in. Going forward from here, when do you start to see all of these stimulus measures actually start to support demand, actually start to show up in the economy and demand pick up?
Yeah, hi, Manisha. Well, I think obviously we saw the stimulus measures last week aimed at trying to shore up the property sector, which we think is still under a lot of pressure in China, and is very much hanging over steel prices, but not just steel, but aluminium and other prices related to copper. So I think we saw a bit of a reaction for some of the prices, particularly the ones that are very driven by futures. But then again, we saw the physical prices kind of really reacting back or going closer to fundamentals in the subsequent days. So I think there's still some very strong sort of structural challenges around sort of China property. So I think, we're not S&P, I think as a company is not really expecting huge stimulus measures like we saw during the financial crisis, for example. But I think that I think it's going to be very hard to kind of move the dial on some of these metal prices, particularly things like steel that I look closely at because of the property sector.
Paul, are you still expecting that China would come up with something more in sense of measures when it comes to property as a sector?
Possibly. I think, the people that we talk to in the market are expecting something else this year. I think that obviously that tomorrow's the China holiday, the Golden Week holidays. They're all going off for a week. And I think some of the sort of chatter that we've been hearing in the market suggests that there could be more stimulus measures. But I think also there's a bit of a sense of quite a sort of sanguine kind of approach to what we're sort of seeing in the market, because it hasn't. Some of the measures that we've seen this year, some of the government meetings, the plenary meeting, etc., they didn't really kind of move the dial all that much on prices, at least not for very long. I think as I say, the market has got some very big fundamental challenges, and I think they quickly revert to those once some of the noise around the futures dissipates.
Paul, when I look at the previous week, and that is when we saw most of the China stimulus measures come in, almost everything is on the positive side. Copper is up 7% up, aluminum up 6%, zinc is up 8%, iron ore prices gained up by 11% in the previous week. The only thing that did not move so much was the steel prices. So going forward from here, if somebody had to invest on the long side for metals, what would you recommend?
Yeah, well, I mean, because we're not sort of equity analysts as such, but I think we look at sort of nickel, aluminium, copper. I think when you look at them, the prices are kind of, I think, determine a little bit what we're seeing in, macroeconomic factors. Obviously, we've had that US rate cut now as well. And also, fundamentals, what's going on supply and what's happening with the LME, for example. I mean, I think, we're possibly seeing a bit of perhaps a bit more sort of upside sort of going into next year. But I think a lot of the sort of macro external factors have proven to be very, very kind of stubborn, trying to shift that high inflation. We thought that would probably improve by now this year, but now probably looking into next year before we see a bit of an improvement. And I think, yes, we have seen some price sort of jumps, but I think, once the market comes back from that October Golden Week holiday, it would be quite interesting to see whether it comes back in a sort of bearish mode or whether, there's a bit of upside. I think, perhaps going in towards the end of the year and looking ahead to Chinese New Year next year, when we might get a bit of restocking, which, should support coking coal, iron ore prices, for example.
Paul, as we get into the final quarter of this calendar year, what is it that you would be watching out for? Is it going to be China yet again for stimulus measures, or is it going to be Fed rate cuts, including other global central banks as well, the US presidential elections as well? Well, that comes in the month of November. So what is it that you are keeping in your eye on? What moves the needle?
Yeah, well, I mean, with the US presidential election, it's, obviously there's a change, and there's talk a lot about tariffs around Chinese manufactured goods that could have a big impact on metals prices. I mean, China's already kind of struggling a little bit. I noticed that the manufacturing PMI data was down again today, the S&P one. Again, I think some of the external sort of challenges, it's harder to export Chinese manufactured goods. Obviously, it's been exporting a lot of steel around the world. So I think we're definitely looking at the US presidential election, and also to see whether some of those, there are more rate cuts, whether that starts to flow through to business investment, consumer spending, to start trying to sort of pick up, I think, some of those, manufacturing goods again. Because so far it hasn't really happened. It's really all been about supply rather than demand, particularly on the ferrous side. So I think, going into next year, we'd like to see kind of auto coming back a bit. Manufacturing being supported, which could help support, some of these prices. But then again, I think the property sector in China, which is, very important, it does have some structural weakness. And I think that's, going to be trending down even more probably next year.
Paul, when it comes to steel, really, and as I said, that is the one that's really underperforming the overall sector right now. What is your sense on what demand, what kind of global production numbers, Asia demand for that matter? How are you calculating all of that?
Well, I think one of the things we're seeing a lot at the moment is these very high level of Chinese steel exports. We're expecting a return to 100 million metric tons this year, which is the first time really since 2015, which was probably the real nadir for the global steel sector. So, for example, you're seeing China exporting quite a lot into India, which is having a knock-on effect on Indian steel makers, and also you're seeing India or countries like Vietnam exporting a lot into places like Europe. So I think it's all having a kind of knock-on domino impact really of these high finished steel exports from China. So I think that's putting a lot of downwards pressure globally. Allied with what I mentioned earlier, there's that lack of kind of recovery in some of those demand sectors as well. So I still think quite a bit of downwards pressure, I think, on steel prices, and until there's more of a meaningful production cuts in China. Not just China, Europe's producing a lot of steel as well, but especially China. I think it's going to put a lot of pressure on global prices, and that could put a bit of pressure on prices and companies going into next year.
Paul, also, as you mentioned India, what's your sense on the Indian demand going forward? Within Asia, India really seems to be shining slightly brighter than what China seems to be doing. So with all that steel imports that we're looking at and various other metals as well, how do you look at India production itself and then Indian demand growth?
Yeah, well, I mean, looking sort of a bit further out, we've got, huge demand growth, steel capacity growth in India. It's the real kind of, I guess, in terms of new capacity and production, it's the real bright spot in the world. Southeast Asia to a lesser extent. But of course, I think, the most important thing is that the domestic economy, the Indian economy really is strong enough to absorb, all those new tons of steel coming into the market. I mean, at the moment, we've seen a bit of I think India's been quite slow to restock things like coking coal. I think after monsoon, we're still waiting for a bit of a sort of pickup there. But of course, if India's got a bit of Chinese steel coming into the market, it makes it a bit harder, I guess, to keep steel production at high levels. But certainly, we do see India. You look at the demographics. It's probably one of the few countries where the manufacturing sector has been performing pretty well. And I think once you start seeing a bit more of that infrastructure and some of those other projects really starting to gain some traction, there's a lot of upside, of course, for India, which I don't think we can really say. I think China has pretty much kind of worked its way through the gears a bit at the moment, and I think it's more a case of just stability really, rather than the kind of growth that we've seen in years gone by in China. But yes, certainly a lot of upside in India.
Fair point that, Paul. Thank you as always for joining us. So, well, in metals, when it comes to iron ore, copper, aluminum, all of them have been trading on the higher side. And as Paul tells us, that India is a shining star within Asian markets, where we have seen the demand growth continue quite on the stronger side. But with that, it's time for a short break. We come back with more.
Welcome back. You're watching us here on Halftime Report. The market is extending its cuts. The Nifty down almost 285 points below that 25,900 mark. The Sensex down 1,000 points. And the Nifty Bank down about 1.5% as well, closing in towards that 53,000 mark as well. More importantly, on the obverse side, we have the Chinese indices doing extremely well. Hang Seng is actually at the high point of trade after seeing a near 18% rally this month, including today's gains. And we have the Shanghai index as well, which is sitting with a gain of almost 8%. So we'll keep an eye out on all of these as they play out, even as our ticker team tells us that even as the frontline indices are lower, we do have a bunch of stocks which are buzzing around. There you have it. Hang Seng at the high point of trade, with the Nifty at the low point of trade as well. On that note, we'll take your leave on this edition of Halftime Report. Come back, we'll have the management, or rather we have the team of Business Lunch taking all the market action ahead.